So let's take a look as we switch over to light crude. For those of you that are new, we're going to be looking at 10-year weekly and 2-year daily charts in here. We look at cycle analysis in multiple time frames to get our best messages. The messages being condition of the market, the highest probability of impulses. In other words, how do you want to bias your position based on what you're seeing? Because outside of reversal periods, markets tend to go in the same direction as they have been. That's inertia that continues, that they continue moving in, and you can see that very clearly here in the light crude market. On the bottom here, again, for new people, these are cycle brackets. These are just simply a drawing tool or a guide that helps us do our cyclical analysis, which is all done manually. Everything you see on these charts really is done manually, other than the indicators that are on here, which are either built into the thinkorswim platform or are our proprietary indicators, such as the slim ribbon PO, which is on the bottom here of the daily chart. This is the slim ribbon right over here, and if you are on thinkorswim, you can download that from our site, and then you can use that, and it has programming in there. The coding colors the bars. When it's positive momentum, it's green bars. It's also green volume bars, as you could see right down over here. And then these are the signal lines down over here in the PO, which is when it's green, it's positive. So that's the condition you have here in light crude. Take a look here at this weekly chart, and you can see two different scenarios in there. When you see the dotted lines, that's the cycle we're in now that is not completed. This is a completed cycle, and that is the average length that you can see right in here. It's pretty long relative to other average lengths for dominant cycles, and you can see each of those makes up a third of that. So this is the minor, this is the dominant, and that cycle you can see clearly in those three parts. We'll go to this cycle right over here, and we are in the second part, the second minor third here, rallying positive momentum, as you could see clearly in here, getting up to these resistance areas. This is the intermediate 78.6%, and this is a fib extension level right over there at 61.8%. Where does that come from? Well, from this low to this peak to this low right over here. That's how we measure that with the fib extension tool. And then we get up here, which is the 78.6 to the 100, which tends to be a target zone. Will it stall at 61.8? If it does, we'll understand it. If it moves through, then we'll have another target up near $60. That's why we have two scenarios in here. We don't often do this, except when we do it in our complex cycle structures that you'll see on the daily chart in the stock indexes. So this is giving you a good sense for the cycle rhythm, which upward momentum strong in here, still some time to go up, but in an area of resistance. So very strong for all of the energies, all of them coming up near a resistance area. So there is risk in here, and especially under the condition of a deleveraging going on, which if we are correct, we're going to see that in February with some sharp declines in the indexes, and then that rolling over into other vehicles, especially can affect the energy markets, as there's some potential assumptions made that there would be a slowdown based on the deleveraging, and also the question whether or not the vaccines are going to get out that fast, and whether or not that's going to affect the economy and energy markets also. So here we are in a resistance area when I look at the daily chart. Now, I'm not going to do it this extensively on the products when I go into gasoline and heating oil, but I want you to see beautiful in here. So here is where the slim ribbon goes positive. The slim ribbon, the alignments in here, as you can see, and again, if you don't have thinkorswim, you could put up exponential moving averages of 8, 13, and 21. You just don't have the coding in there that gives the signals or colors the bars. This, you could see, went positive this whole time. The slim ribbon tends to be support, as you can see right over here. And each of these cycles, 1, 2, 3, 4, which just bottom right in here, is what we call positively configured. In other words, higher highs, higher bottoms, traveling up that slim ribbon causes this to be green, as you can see right in here. All of that green volume bars right in here all tell you momentum conditions are strong. That inertia is expected to keep the price going up until something acts on it. And you can see that's exactly what's happened. These blue areas, or aqua, right over there, are fib extensions, which are essentially targets. And you can see it's been following that and getting up there. So all of that strength, the next support right over here, right at the bottoming period for the cycle, as you can see, it tickles it at the bottom of the slim ribbon and then begins to move up again. So this continues to be a powerful pattern. The question is, and you can see that we have this now coming up, testing the high, and then coming down. I did this projection, and I have a bias in here that I need to own, and that is that I believe that we're in this period of stock indexes correcting, which is a period of deleveraging. When you get into this, you're going to get money moving into places of safety, like the dollar. When the dollar moves up, you tend to have commodities moving down, and that's why I think you only at best get a test, fail at the resistance areas, and then come down for a little bit. Now, when you get over past a couple of these cycles out into March, you could be moving up again. And you can see we have this projected over here way up into March on the weekly chart. So that's why we have, what we look at is are all the correlations and timing to be able to do these projections. And that's why we have a lot of level 4 members, because these are very complex, and those people learning cycle analysis do tend to want to become level 4 members or take our cycle analysis workshop because there's so much support in learning this style of analysis.